So welcome everybody to Real Fridays. I'm super excited to have Charlie here from Homebot. And I know Brock is late as he typically is. And I know Jeremy, I think, is having some signal issues himself, but I know Jeremy is going to be trying to join as well. How are you doing? Happy Friday. This is great. It's August 16th. We're
just going to say thanks
getting to the middle of the third quarter. No, this is great. You know, this is and I assume you've watched our podcast in the past, but we have I'm assuming you've watched our podcast in the past, but we have set up kind of a framework where we just ask like real conversation. We just have real conversations around mortgage, housing, and real estate. And our main focus is just to sort of skip the fluff and really sort of get to the nitty gritty of how companies work, what are our strategic sort of objectives, and how does a tech vendor like Homebot, how do you actually sort of move the needle, right? How do you actually have a meaningful impact? Everyone's trying to make a buck, but how can you make a buck with having a real, as a market mover, where you're actually some sort of a beacon providing information that's actually useful and has some intelligent use for mortgage companies and real estate agencies and consumers alike, you know? So how do you move the needle? Like, how do you do that?
So Homebot moves the needle, and our core principle is do right by the consumer, right? So for everyone who's unfamiliar with Homebot, we help lenders and agents stay connected to their clients, their database, and we also help lenders and agents stay together and work better together. And we have about 10 million clients who we reach every single month, with about 8 million who are opening our emails and about 4 million who are actively engaged with personalized financial content related to their home.
So you ascribe the term consumer as a client, like that's what you consider a client?
We do. Yeah, we speak about clients and consumers kind of synonymously.
But consumers don't pay for your service though, obviously, right? Or
they don't. They don't. So lenders and agents pay for our service to nurture their clients.
Yeah. Okay. Got it. Okay. So, because I mean, having 10 million customers, I think it's a remarkable opportunity to monetize those touch points with the consumer. What is your consumer engagement like as far as consumers opening up emails? I know I open up every time I get my Homebot, and I have a few properties, and I get Homebot notifications. I open them up every single month, even if I don't right on time, dude. Like you are taking
earlier than Potter, it looks like. So I'll take it.
well,
I'm not sorry to you, right?
Brock,
it's hilarious. You came in like full Maynard. I'm surprised you don't have a fishing lure in your hat along with it, you know?
Oh yeah. I could probably do better. Give me a second. Yeah.
So, but being able to be like, so I know the engagement with Rick Roque in the Homebot notifications that I receive, is 100%. I open up every single month. Right. So what is your open rate? And is there a way to measure how much time they're in that email or in that notification or in that site?
There is. Yes. The open rate's about 80%. So about 10 million people receive some type of notification every month from Homebot, whether it's through our native app or through the web app. 8 million open the email. And of those 8 million, about 4 million are actually engaged with the personalized and dynamic educational experience that we provide.
That's incredible, and the only revenue stream you have right now is through realtors and mortgage companies, in essence, paying you to send to their customers that call it like the home and community intelligence kind of reading or data.
Exactly. So that's the core experience. We just launched a new product called Partner Intelligence, which allows lenders to see agent production stats, kind of their market share for given agents, receive listing alerts for any agent they want to sponsor. And so we're really excited about that product, especially because of how we're integrating it within the Homebot ecosystem.
Yeah.
Lenders can now see, which agents are on Homebot, which agents are, free agents, if you will, and how to most effectively kind of work their referral network.
Why aren't you partnering with like Lowe's or Home Depot or Target or, touching 10 million consumers a month? I mean, imagine if you had a newspaper that was touching 10 million, readers a month.
Mm-hmm.
They would pay big money for full page ads, quarter page ads, that kind of thing. Like, why not monetize that and do some kind of a rev share with either products that are purchased from that or just placements, strategic placements that are useful, not, something that a consumer, when you just move into a house, you're like, this is something I'm going to buy anyway. So why wouldn't you do that?
It's a great question, Rick, and something, that we want to do better going forward is support kind of the uniqueness of a given lender's ecosystem, right? So Homebot doesn't want to partner with Home Depot, but say Sierra Pacific has a very specific partnership. We want to create kind of the dynamic experience where we can make sure all of Sierra's clients, are aware.
Cross country. I mean, a better example would be a larger institution, especially because you get there isn't. Well, you don't have any scale at a smaller lender like Sierra or whomever. I mean, you have a lot of scale with a New American Funding or an NFM or a cross country or a PRMG. I do like the PRMG model where there is kind of a wholesale retail opportunity where you're reaching thousands of brokers and their customers, as well as a kind of a retail channel of numbers. But so I think companies with scale could do that. The problem with mortgage companies is that they don't have, their core business is mortgages, right? So they would almost rely upon you as the vendor to deliver that value to their customer, just as you're doing now.
Right.
So why would you draw that line?
We actually do that a little bit. So I can help you there, Charlie, if you want.
Yeah, go for it. I was going to say this topic might be a good segue to our part.
But yeah, we have a moving partnership that is like, we didn't think people wanted it, and then people wanted it, and so we did it. And now and then there's like several more levels to that. You've heard me talk 1,000 times, Rick, and once or twice probably Charlie, about how much money we made back at Roque when we were selling like home security systems and like some other like random products that were related to the home buying experience. It's like, cool, like never, not on anyone's bingo card to that home security systems were like the right thing to sell. But if people want them, then sure.
That's the thing, Charlie, is that it's all about delivering value to the consumer. The problem with mortgage companies is that they're so wired around the transaction, and they're so wired month in, month out, month in, month out, month in, month out.
Yeah.
So engaging with Lowe's or Home Depot with a 6-month conversation around, what the ad is going to be like, what the rev share is going to look like, how are you going to deliver, that particular promotion to the consumer? Is it going to be an email? It's somehow going to be placed on this third-party site, so you're kind of negotiating on behalf of, whatever, Supreme Lending or CCM or whatever. You're negotiating on behalf of the lender, but at the same time, you're doing it for or to be placed in Homebot. That doesn't really make a lot of sense, right? But I do think that you could make a tremendous amount of money off that, because as a consumer, I'm looking at the core vitals of my home, right? Equity, value, community data you guys deliver. Why not appliance data? Why not all, HVAC data? Why not data associated to my home that really drives the value of my home?
My roof's 12 years old. I'm probably going to need to replace that.
Something we're seeing a lot of excitement around is insurance. And I think, before rates went from, 3 to 7, a lot of lenders were trying to figure out how they expand into insurance. And we've seen a couple kind of stick with that strategy, and they're very interested in using Homebot to put more insurance content in front of the consumer, which we've done, right? So for every consumer in our database, we send them a reminder about 90 days prior to their policy renewing, which is a great conversation starter. Do I have enough coverage? Is this the same policy? Can I save money by switching to a different policy, et cetera?
So Brock, I'm taking over this conversation. You're adding. I want to see the value you can add to this conversation right now, Brock.
I talk to Charlie as much as I get the chance to. Yeah.
Aren't you guys working together?
I can box you right out. Yeah.
Aren't you guys working together? Did you guys do a relationship together, or is that launched yet, or did I just announce something that wasn't ready?
It's announced. It's launched. Charlie Co put out the press release. What, 3 weeks ago, probably.
Yeah. Right.
Yeah.
Yep.
Yeah. So the way it works is it's really for their servicing partners, although we both also sell to credit unions and some other like affinity type partners that are getting the experience you're getting as Roque, the homeowner, to be able to save a bunch of money when you sell your home. And so from the NewsIt perspective, we made because we are such fans of Homebot and came across having some of the same of our biggest partners or their biggest partners, it made a lot of sense to put something together. So we have actually even additional cost savings to what we already do for everyone else for Homebot. So 2% if you buy and sell, which is what a lot of Homebot's clientele is doing, is their current homeowners that are going to sell and buy at the same time. They can save 2% on commission. Obviously, that's sort of like a powder keg right now, with tomorrow being the day that various commission updates happen. So we can talk about that if you want, Rick. But yeah, that's how we structured our setup with Homebot, is really like we're selling to the same people, we're working with the same people. It's a very like continuous experience. So hand raisers at Homebot just save extra money by working with NewsIt.
Yeah, it's a fantastic offer, and I think there's nothing out there in the market that's saving somebody 2% when they sell and buy.
So is there any? How are you seeing is the change of the real estate negotiation on the commissions? That doesn't impact Homebot in any meaningful way, right? It's not going to drive any more or less engagement with it, or is it?
I don't think so, Rick. I mean, one of the ways in which we're playing into it is creating a search experience that's much more focused on affordability, right? Yeah. So starting now, we're showing consumers, giving them the ability to search based on concession within our search experience, right? And I think our view is that we're going to see the number of listings with a concession go from currently around 5% to call it 20 or 30% by year end, and potentially much, much higher than that next year, right? So the consumer's ability to understand the type of concession and which homes have one, period, I think is going to be really.
That's fascinating. Let me ask you, did I meet you at the Housing Wire conference?
Yeah.
And wasn't there an investor? There
like 30 minutes at Housing Wire. I was kidding. I said we chatted for like 30 minutes.
Yeah, no. I knew we had chatted, but I wasn't sure which conference it was at, because so it was at the Housing Wire conference.
Yeah.
But what is But what wasn't there? Don't you have a board member, like a founder? Was he a really tall man? He's on the board.
Ernie Graham's our co-founder. Yeah, he was there, and the three of us were chatting for a bit.
That's right. Because I remember him saying that he wanted like nothing to do with home appliance or nothing. You guys had done a fair amount of research on that side of it, and it was kind of a not as quite as
right in terms of
money just wasn't there as one would think.
Yeah, I think his point, which I share, is we're really focused on kind of the big transaction, right? Using your equity to the highest and best use, finding the right home, knowing the right time to sell, getting in the right insurance policy. But I think others have tried to kind of be kind of the everything app with warranties and everything around the home. And what we've seen just in our research is that very few people actually take action on wanting to upload a bunch of documents and stay organized in that way. So, which I think was your kind of thing of, hey, if you can show a consumer kind of all these different ways in which they can optimize their home kind of month in and month out from an energy perspective, appliance perspective, which I think is interesting. I think it's just it's hard right now to make the technology fit kind of that strategy.
Yeah.
Interesting. It doesn't look like Jeremy's going to make it. I know he had a family obligation and he was on Lake Superior or Lake Huron, one of the.
No, don't give him that type of credibility. He's at one of the lesser Great Lakes. He's at
Erie.
Which one? Yeah, Erie. Yeah.
Yeah, I just know it wasn't Lake Champlain, so I didn't care.
Yeah, Huron. Yeah, I asked him if it was a Great Lake, and I was kind of kidding. Yeah. It was.
So where do you go with the platform? I mean, do you know what your realtor penetration is? Like, do you know what market share? Or how many realtors do you have engaged?
We have about 40,000 individual agents on Homebot.
So it's substantial, but tons of room to grow.
Lots of room. Yeah, and our average customer skews towards a top producing agent.
Yeah.
Same with our lenders. About 70% of our, call it 15,000 individual LOs on Homebot, whether that's individually or through an enterprise agreement. 70% of them are in the top 30% of producers. And that's
the good thing about charging for it is only the people that are making money are paying for it, right? And so.
Well, the thing is, Charlie, if there's 100, like in the first quarter of this year, and I haven't looked at the second quarter yet, but the first quarter of this year, about 117,000 LOs did at least one unit, right?
And
so let's just
realtors, right? So
let's just use that number as the number, right? And a third of that, let's say, are the real producers of the volume, right? So it's 40,000 LOs in the country that really are doing most of the volume. You guys are, so I don't know I almost think your market share should be measured more based on penetration of loan officers do X number of units a month versus total number of loan officers, because you're going to hit far more consumers based on carving it up that way, rather than just going for total user count. But that might be, is that how you guys measure it or no?
It is. That's exactly how we think about it. I mean, at least the data we have, there's about 66,000 loan officers who are in that top 30% of producers.
Yeah.
And we have about, call it 20% of the
yeah. No, that's massive.
Yeah.
That's and how I don't know if you can answer this question. How much money have you guys raised to date? Do you know?
So we're owned by Alpine Investors, which is a growth focused investment company.
Yeah.
So we're self-sustaining, not burning cash. So we're past the days of raising money, but back in 2017 or so when Homebot was founded, we had a handful of investors, and then quickly got to break even, and since then we have not needed to raise.
Yeah, no, that's fantastic. No, it's a great story, and people always think it's so easy to duplicate. Lenders will say, oh, we could do this, we'll build our own native solution to this. I think New American Funding may have done something to that effect, and I don't know, but I know that mortgage companies that tend to be fairly cavalier with their money in good times, and then they drop those pet projects in bad times. It's so easy to do this, and it's not. You live it every day. It's not easy to organize a product to this sophistication. Who are your competitors again? Name three of your competitors.
There's definitely nuances between,
House Canary. Is that one of the? Wouldn't that be a competitor?
They have a search experience that works for lenders, but it's more kind of a corporate portal solution. I think they're getting into the space of giving something for individual loan officers. And there's a few others. I won't name them necessarily, but
you just want to give them the airtime.
Yeah, exactly. No,
it's a market thing, So what separates you? Why are you different, or why would you say, other than maybe time to market, why are you guys different feature functionality wise? How do you deliver better value?
Absolutely. I think a big part of it are the results, right? I think it's easy, relatively speaking, to kind of get to a similar kind of feature set. But when you look at the, many engineers we have focused just on things like email deliverability and landing in the inbox, like that's where you really differentiate, right? So 99+% of our emails land in the inbox. Our unsubscribe rate is incredibly low, right? So we keep the hygiene really, really strong. And then from there, design and user experience plays a big role in getting people into the application. And then, you need to build a really strong user experience to retain those users to get 4 million people coming back every single month.
Yeah.
But from a feature perspective, one of the things that, really does differentiate us is, our wholly owned search experience. So we built a brokerage for the purposes of allowing lenders and agents to educate their clients in a unique way about listings, what they can afford, searching by concessions and things like that.
I'm sure that part was a lot of fun, having done that a couple of times.
It took a long time.
Yeah.
So that's very difficult to replicate. And then, kind of speaking of breadth, we have the ability for consumers to download a native app that's provided to them by their lender or their real estate agent. And what we find too is people who download the app spend about, 3 or 4 times the amount of time per session in the native app compared to the web experience. And about 80% of our usage is mobile, right? So if people are in the market, it's like you really need a native app because people don't want to go to web experience. Like they
why hasn't Zillow built this? Because it seemed like this would be a pretty direct extension from what Zillow currently does. Or do you partner with Zillow? Like why wouldn't Zillow acquire you?
We don't. So it's really interesting. I like to listen to all of Zillow's earnings calls, and they released a couple of weeks ago. Zillow Home Loans has taken off. They did, I think it was like $800 million of purchase volume in Q2. And they did about, I want to say 800 in like all of last year. So I think before we know it, they're going to be a $10 billion lender in this space.
Yeah.
So through their Premier Agent program, they're really focused on kind of the attachment rate from the lending side and matching that with their agents. So Zillow is very focused on this integrated, one transaction type of experience. Yeah. And so, we're in some ways kind of the anti-Zillow, like empowering lenders and agents to keep their clients from going to Zillow. Right. And to allow them
almost more reason for them to buy you.
I was almost going to go so far as to say like the partnership we announced between Homebot and Newsip was like kind of what Zillow is trying to do. But we're the people that do it for everyone else, and so that I think that's kind of, I don't know, we've never used those words, Charlie, but that's like kind of how I thought about it. Was like, this is what the biggest lenders have built themselves, like Roque and Loan Depot,
right.
The biggest consumer direct lenders. And This is also what Zillow wants to build. And we have key parts of it. And so why don't we integrate those key parts and make it easier for everyone?
Absolutely.
Everyone else. Yeah.
Absolutely.
If you want it, like Rick was saying at the very, when I first joined, a minute and a half late, maybe 2, was basically like, lenders are thinking about whether they want to build it themselves. You can, sure. It just, at some point that costs millions of dollars to build all the different things that especially you have. Some of the things we have as well, but more of the tech is on your side, honestly. We're more of the transactional experience. And so, it's like, go ahead, New American Funding or like Amerisave as well. A few other of the consumer direct companies that aren't in the top 5 or so have decided to build it themselves, and they're doing a really good job. Like no problem. Like totally respect the initiative of wanting to make money on all this, but it just would be a lot easier to partner, and so that's what everyone else is going to do.
Yeah.
Yeah. We've had a handful of leaders who have embarked on the journey of building it themselves, only to come back a couple of years later. But yeah, just when you think about the investment and, the hundreds of people and quality engineers, and I mean it's a full focus.
Brokerage licenses, everything else. Yeah.
No, it's a fascinating endeavor because it's one that you ask yourself the question of where do you go from here? You know what I mean?
Yeah.
Like is it just a matter of like, it's phenomenal as it is, just get it in the hands of more and more consumers, or is it a function, or do you hook more and more consumers based on additional functionality you don't have today?
Yeah, I think it's a combination, but to put it in, I think the lens of most lenders right now, at least I think most lenders are really focused on, whatever intelligence edge they can get that allows them to reach the consumer before their competitors. Right. And that's where we see servicers going, big lenders, everyone's trying to accumulate as much data. And, I think the most valuable data in that intelligence arms race is first party data. It's what's the consumer telling you? How are you driving consumers to you directly, right? Because everyone wants inbound opportunities. But in the absence of inbound, right, what do I know about my clients, the time they've been in their home, their rate relative to the going rate, life events? Did they sell? Is there an opportunity for me to win that deal? All of the third party data, right? So super high level, like we want to drive as much consumer engagement that allows the lender and the agent to understand their clients better than anybody else. But in the absence of that, we want to provide all of this third party data to help our customers get the most holistic picture of their clients as possible.
Yeah. And which means what? Like what further direction would you go to kind of complete that picture? Or
yeah. And so just
there's equity, there's what? There's community, there's crime.
Right.
What else?
I mean, to bring this back to today in terms of third party data, we're launching listing alerts very shortly. We're launching a likelihood to sell score, which has great accuracy and can allow Rick, one of your lenders, to go into their Homebot account and see the 5 people who are most likely to sell in the next 3 months. And then from an equity perspective, there's a lot we're excited about from, a cash out perspective, from a broader equity release perspective, being able to potentially determine who has a lot of personal debt and who could benefit from a debt consolidation loan. Regardless.
Why not like almost a pre-qual communication where you're monitoring the equity, you're monitoring the debts.
Yeah.
So you have credit integration, and then there's maybe some AUS integration from Fannie or Freddie, and then you're delivering to the consumer that, hey, if you go back to your lender, you go back to, NFM or Supreme or whomever, cross country, and you say, hey, go back to your lender, you're pre-qualified for a mortgage. You can quantifiably reduce your payment by $150 a month, or you could tap into, this amount of equity. And then even if you have an AVM plugin, which you already have, you're doing, so is that something that could be of interest to you guys or what?
Absolutely. Especially because we think it's so much more impactful if you can put that data and that savings in front of the consumer and have them reach out to your lender.
Because I thought of you when I did this post a couple of days ago, because right now, as a consumer, I do an application to get a mortgage, right? So the mortgage company is very reactive, and of course it's very transactional. But as a consumer, I'm moving forward at a time when I think I'm ready to get a mortgage. I may not be, or I might be, but I think, right?
Right.
If I don't think I'm ready to get a mortgage, I'm not going to do anything. I'm not going to go to Brock as my loan officer and say I want to get a mortgage or I want to look at it.
Right.
How cool would it be if I just signed something to Homebot to say, or my lender, empowered by Homebot, to say, go ahead and just refinance me in the background when I'm ready, and just send me an email or a notification when it's done. Mm-hmm. Right? So when I get a notification, say, hey, I just automatically refinanced you. Rates hit this. Your credit score did this. Value is this. And now you're automatically saving $120 a month. Just hit, I agree. click on a button and it's done. And I didn't even know. I didn't even know I was ready. I didn't know I could save money. But it's a way I could automatically and proactively do a mortgage without even knowing that I was ready or actively pursuing one.
Yeah. Are you talking about a future state where, the underwriting and processing can happen?
Well, yeah. I mean, because what's about underwriting? You're validating income.
Control, yeah.
You're validating income, which is a true integration on your side. Credit is just a credit integration on your side. You already have the appraisal side of it. And then, so you have income, assets, credit, term. You already know what the mortgage is. So this is kind of a refinance automated. Like if I were a servicer, I would take your solution and I would plug these 3 spokes into that wheel and then send this to all of my, if I'm servicing 500,000 consumers, and just have the consumers automatically opt in. So that way I could just say, just refinance me and tell me later how much I'm going to make or how much I'm going to save each month. And as a consumer, I could say, refinance me when I could save $150 a month or more. And once it triggers that, it automatically does it. I get a notice that I've been refinanced. I just click, I have like 12 hours to hit accept. I hit accept, and then I'm saving $150 a month.
I love it. We'll call it click button, save money.
Yeah, it's too
never been a party of that Super Bowl.
Yeah, it's just a mortgage monitoring. It's just proactive versus reactive. It's getting a mortgage and you don't even know it. You don't even know
because it's Real Fridays. I'll go ahead and put a finer point on it. Like, so you guys are getting a little more competitive with MMI, more recently in Genius, some of these other companies, right, Charlie?
We are. Yep. Yeah.
Because you're gathering that LO realtor relationship data. You're gathering general production data from both those sorts of things, right?
That's right. Yeah, that's the partner intel product that I was talking about earlier.
Yeah. So I think that's, Rick, when you think about whether it's whatever cross country or movement or like people like that are like heavy retail purchase, maybe even Loan Depot, whatever, like those sorts of groups. It makes a lot of sense that they're getting several things for one. Full disclosure, I'm early advisor and hold shares in Ingenious, and have given Rick a hard time for years of only recently liking Ingenious data. But
I think Ingenious is a great company. I really do.
Those are my guys. I love those guys. But for where you are, Charlie, it makes a ton of sense that you guys are offering that as a part of all these other things you're already doing. And so it's like you're not competing with them in a vacuum. You're competing with them because you have all these other things and it makes sense to add it, right? Like that's
exactly. And I think there's so much connective tissue between our core product and partner intel. It just makes a ton of sense. Like in the future, right? A loan officer being able to say, I
want to bring on 3 of my realtors and
I've got my 500 clients in Homebot. Based on all of those transactions and all of those clients, which realtors am I connected to through my refinance business, right? Right. What's kind of my average deal dynamic, and which agents should I be prospecting into based on my transaction history?
I need to jump to 1 o'clock. I know Brock's going to close this out, but I'm going to make sure that, especially when I promote this episode on LinkedIn and other platforms, that as many realtors that I know and mortgage loan officers that I know, that it just brings awareness to what I would consider a best in breed, mortgage and property illuminator, if you will, for consumers. So I think you guys are doing a great service for mortgage companies, but I think an even better service for consumers and exploring their options. So I love it. Keep sending me my emails and my properties, but I love it.
And huge fan of Real Fridays. So thanks for putting this on every week. I'm a big fan.
No, I appreciate you, man. Yeah, promote it and tell everyone about it. I appreciate it. But Brock, close it out. Thank you, man.
Thanks, Rick. Have a good one.
Charlie and I are going to talk for several more hours, don't we?
Yeah, we'll keep going Lex Friedman style.
All right. So now it's we got rid of the old school retail guy. So now we can talk about real innovation, right? I was holding out hope that Potter was going to join at some point. He had a few questions for you, but he's on the middle of one of the Great Lakes. Yeah, man. Appreciate you coming on, and I'm glad that.
Did you say old school retail? I heard
that. Yeah. I was hoping I was going to get you back. I was going to be more consulting if you were a little longer. But
I love the return.
Yeah. Well, isn't that funny? The difference in the video, the quality. I unplugged my video, and you could see the before and after, and it's just incredible the difference. I kind of look like Brock now, but beforehand I was actually a real leader. But anyways, we'll see you soon.
See you, Rick. Have a good one.
See you someday, maybe.
You didn't think he was still listening.
It's a good part of Real Fridays. Is some occasionally pretty aggressive badgering between the three of us. Yeah. But no, I am a little bit sad that Potter wasn't able to make it, because he had a couple like really specific consumer experience questions about Homebot and like where you were heading. But I love that you had the Rick. Yeah, like and obviously I was teasing him. It's hilarious. He was still listening, but he's worked at so many of these big lenders and so many of these, particularly retail lenders, which is not Potter or I's background. So I do think it rounds out like the questions we're all asking in the show and everything. But
yeah, I know Jeremy has some really interesting views on consumer experience and comparing lending to different kind of consumer offerings and where it's going in terms of giving consumers the ability to get a price quote way earlier in the process, and they don't have to go through the whole application, and really opening up the system. So I was excited to hear his perspective again, but we'll have to do that offline.
I'll plug him for a second, even though he doesn't deserve it because he didn't show. But he has a I think we mentioned it last week, but he started doing a podcast every Monday with Chrisman Media, Rob Chris, or actually with Robbie Chrisman, the son Rob Chrisman, and some other folks, called Now Next Later, where they have 3 segments every show where it's like, what's going on now, what's going on next, what's going on like much later, and so it's a fun perspective. He's one of my best friends. We talk all the time. When we met, the same moment. So you get it, but we'll do that. In fact, I know he'll be at all 3 of us, Rick and Jeremy and myself and yourself. So all 4 of us will be, I believe, at MBA, right, in Denver.
Yep.
And then in addition to that, I think also a couple other conferences. Are you going to go to Housing Wire IMB?
I'm not. I'll be at Digital Mortgage. When is that? It's like the second week of September in San Diego.
Yeah.
Digital Mortgage, and
I have my conference calendar here somewhere. I'm not making it to Digital Mortgage, but it makes sense for probably me and definitely you to be there. We're just not happening to make it this year.
Yeah, I think that's a great event. We've been to it every year for the last 4 years, and as typical with a lot of these conferences, like a lot of it's happening kind of outside of the conference, but I think there's been some good content as well.
Yeah. So Digital Mortgage. Are you gonna? So my next handful of I should say NewZip's next handful of ones. Audie's doing a couple of these himself. Is we're actually going to be in Denver. At least Audie, maybe myself. September 8th and 9th. I think it's the 8th is whatever the Sunday is. We're going to be part of the Mortgage Collaborative's innovation. I think they call it Mortgage Tech Day. X number of companies pitch, and some of them are companies they've invested in.
Awesome.
They've not invested in us. It was just kind of an open invite to us because they thought it was a fit. So Audie's going to do the pitch. So I'm probably not going to end up going because we're only going for a day.
Gotcha.
So he'll be in Denver in a couple of weeks, like the 1st or 2nd week of September. And then I'm doing a couple of regional events in Boston and New England mortgage bankers, September 13th and 14th, and Boston the day before that to meet with a bunch of real estate innovation people. And then possibly Blueprint in mid-September, and then most likely Acuma, like October 1st, basically.
We'll be at Acuma for sure. Yeah.
Okay. Yeah. So
that'll be a great conference for both of us to have some common conversations.
Yeah, I am on the record as being a little bit hesitant with the credit union channel, and I was wrong. And they love your solution right now, and they love what we do for them in terms of the member benefit, like the affinity marketing, those sorts of things. I've honestly been blown away by we're creeping up on half of our partners being credit unions, and I was like pretty skeptical, and I'm pretty skeptical of the channel at the time when I joined about a year, I joined a little over a year ago, but our first credit union partner was less than a year ago, and it's already close to half our partners. So it's worked out pretty well. So yeah, we'll have some representation at Acuma, probably myself, and then of course MBA Annual want to hang out with you and all your folks.
We'll do something at the office. Be great to have kind of an event, happy hour, but if not, I mean, we'll
whatever it is, we'll keep it good. Yeah, that's looking forward to it, and I think I mentioned it when I first joined, but like I really appreciate how like we met kind of in the wild of like we're partnering with the same people doing not the same things at all, like analogous things, continuous things, and so it was selfishly it was fun to listen to Rick grill you a little bit on some of the questions about Homebot, because like I haven't really done that because I kind of intrinsically saw it, intrinsically was there with some of your existing partners, and that's literally how we met. So like that's one of the best, obviously like probably the best possible way to do business is like we're working with all the same people, like why don't we just do it more? But I never really honestly got the full Homebot pitch, so that was fun.
Awesome. But yeah, it was glad you guys invited me on. It was a ton of fun. We'll have to do it again sometime.
Yeah, absolutely. Cool. Well, we'll be in touch. Actually, no, I have one more question for you. Rick tried that, but you gave an evasive answer. What do you think about all the changes happening tomorrow with all the realtor commission stuff? I know it doesn't necessarily.
I know. I think.
What do you, Charlie, think? Yeah.
Just from Twitter and Reddit and talking to agents and talking to lenders, everyone kind of has a different perspective on how this is going to unfold. Right. So I think the fact that there's no convergence or consensus on how this is all going to unfold is makes it fun, but also a little bit worrisome in the sense that like, at best, this is going to be organized chaos for the next couple of months.
Yeah. In a couple of days, particularly.
For sure.
In my case, but we're a real estate brokerage. We're transactionally like involved in these deals.
Yeah. Do you feel like the market is ready for it, or what are the biggest like unanswered questions that you have and some of your partners have?
Yeah, I'll give you a two-part answer. Part one is like how we're handling it, which is we're keeping every consumer experience and consumer offer consistent because we just think that's the best decision in chaos. It's like let's be the consistent group that you can work with and that our lenders can work with and that our strategic partners like yourself can work with. So we're like moving heaven and earth to like make sure like whatever happens, we're going to keep the consumer offer of the cash back on the buy side, the discounted listing on the sell side. Whatever changes happen either way, we're committed to being that amount cheaper on the buy side for everyone else, 50 bips on the buy side, 100 bips on the sell side. For you, 150 bips on the sell side for Homebot partners. So we're just like priority number one is like we're just going to handle that, and we're going to make sure our margin may go to zero on a given deal, and fine. Like we like that's who we are, is that we're going to consistently like that's why people partner with us, right?
Absolutely.
And over the course of days, weeks, months, years, like we'll make money. So it's like, we're just trying to be supportive of that consumer experience, I guess I'll say. And then, but I guess the part two, as like more of a personal statement on it, is expecting a lot of like regional differences. I think what's going to happen, in my own humble opinion, that like no one asked for, is that I think
I asked for it. Yeah.
None of our partners asked for it. I just think it's going to be. I just think we're going to turn into like more of like an old, like the old school days of like, in some places people charge so much more, other places they charge so much less. Like, and we're just gonna, companies like ours, companies like yours to some extent, but definitely companies like ours are just gonna have to understand that. It's like it's never been easy to be a 50-state solution, but I think it's going to be harder to be a 50-state solution tomorrow than it is today. And so we're just trying to gather the right data. We're trying to gather the right partners that can help us think about that. We're lucky enough to be partnered with a lot of good 50-state mortgage companies and a lot of large real estate companies as well. That can kind of whiteboard with us, brainstorm with us. But
absolutely,
we're keeping it as simple as we can right now.
To add to that point, I mean, like some of the mega brokers, I mean, there's some pretty big differences in kind of their guidelines when you look across the ecosystem, and that just kind of affirms the point you're making, which is everyone has kind of a slightly different way of kind of looking at the world in the future.
Yeah.
One of the things that I've seen recently, which is interesting, is there's a number of websites now that have popped up, right, that are showing kind of buyer's agent comp,
things that they're not supposed to show. So, arguably, I'm not a lawyer, but yeah.
Right, like with the initial ruling, you weren't allowed to display it in the MLS, and then you're seeing this kind of, let's call it like a gray market. And I think whether or not those live is kind of an open question. Every lawyer seems to have a different opinion on it.
Totally. Absolutely. Yeah. So, from our perspective, we're just kind of going to deal the hand, play the hand we're dealt, like where it's just like, hey, if a buy side agent is only going to charge 1%, we are going to charge exactly the amount to fund the cash rewards, which is 50 basis points of the purchase price.
Right.
And music will make $0 in that deal. And if that happens a lot, we'll have to revisit that. But like, we don't think it will happen a lot. We think it'll happen. But like, it's like one of those things where it's like, I don't know. Maybe we're misjudging marginally of like the scale of the difference, but we kind of think it's just going to be, we get some deals that are crazy relative to like the old world as of today, not tomorrow. But we don't think we're going to get all our deals looking like that,
Yeah. I think like at the highest level, the emphasis on consumer choice is a great thing. And I also think that kind of the, some of the industry opinions that you're going to see a large swath of agents leave the business. I mean, that might be true, but those are the agents who are doing very few deals right now. But I think the call it medium to top producers can certainly justify their value because they play such a critical role in guiding the consumer to the decision of their lives.
No, I totally agree with that. I think, I remember like kind of like boom times, like 2019, 2018, 2020, like maybe even like 2021. There were over 2 million real estate agents that were members of NAR, licensed, whatever metrics. And now I think everyone's saying 1 million. And I'm like, okay, I don't know. Like I haven't like done a rigorous analysis of this, but we're already saying 1 million where 3 or 4 years ago we said 2 million. Like, it seems like some of the like drift already happened.
Sure.
And I have said on this Real Fridays specifically several times that I think that having 2 million realtors and over 200,000 loan officers is probably not sustainable. And like good for everyone. Like obviously harboring no ill will to the people that came into the industry opportunistically.
Right.
Everyone does that to varying degrees. But it's like, yeah, like you should probably get back out if you have the opportunity for a lot of people. But I think a lot of that's already happened. I think it'll get a little worse for realtors. I don't think it'll get too much worse for loan officers. I think like Rick posted something like it was like a little over 100,000 active loan officers so far this year.
Right.
110 or 117 or something. I think it was 117.
I mean, that's pretty consistent with what I see too.
Yeah.
But there's no consensus on kind of the agent TAM, if you will. I think everyone needs to change and adopt a
million maybe, give or take.
X number of agents.
1 million. Yeah.
Exactly. Hey Brock, I do have to hop, but I really appreciate you having me on, and we'll chat soon.
No, I appreciate it. Looking forward to seeing you at some of the events coming up. Thanks for coming on.
See you, Brock. Appreciate it.